Hey, good morning, good evening, good afternoon, folks. This is one and only V, the Guerrilla Economist, coming to you live on this edition of Kelleran's Corner. We got Ben Kelleran with us. You can find him over at contrariancorner.com. Links are in the description box. He is an energy market trading experteur. That's not even a word, but I just made it up because it sounds cool. And on top of that, he has a knack for the geopolitical, geostrategic, and how it plays geoeconomically with the most important commodity on God's green earth, the real currency of kings, folks, energy and petroleum. That being said, Ben, good morning, buddy. How are you?
Doing pretty good. Been interesting couple of days with my favorite misfit toy of an investment, but I'm sure we can get into that later. But yeah. I actually wanted to lead off with some stuff on copper, which I think is I don't know if you heard about what was happening in the mine in Indonesia, but they had a massive mudslide that is, I think it was 4 or 5% of global copper supply. That's temporarily offline, and sounds like we'll be offline till 2027, at least most of it. So yeah, figure we could start there. It'd be interesting to chat.
Yeah, absolutely. Let's get into it.
Yeah. So let's see, it's called the Grasberg mine, and I think Freeport McMoran, the company that owns it, the stock was just getting smoked the other day when kind of this news hit. I'll screen share and we can get into some of that stuff. But basically, sounds like from what I've been reading that it'll be at least 2027 to get back to where it was operating before. And there's got some talk that they might be able to start production from parts of the operation that are not affected by the mudslide. But I've talked to a lot of smart people, and they like copper a lot, and it'll be, I think, another commodity that's kind of flown under the radar that I think does pretty well. I don't know if you've kind of done the digging on it. I have a hard time getting super bowled up on copper, mostly because I think some of the demand side, like projections of just like exponential curve up and to the right of just extrapolating all this stuff, whether it's electric vehicles or electrification, renewables, like whatever they're talking about for demand drivers. I think that's it's hard to get too excited about some of those trends. And so I'm not in the Super Bowl camp, but I think as the rest of the commodities work, I think copper is one that, I mean, you look at it relative to gold, you look at it relative to other kind of commodities, or where that kind of valuation puts it, like it's very, very cheap. And there was some tariff shenanigans as far as, man, I need to actually pay for TradingView if I'm going to use this with any frequency. But anyway, this in here was all the tariff like shit show where Trump was like, oh yeah, we're going to tariff copper. And then I think they flip-flopped on it, and that's why it went back down. But decent rally off the bottom. I think like you start looking at some of these projects. I know a couple guys that are really like some of the juniors, like small companies in the copper sector, and they basically said, hey, if some of these copper mines get up and running, like they just print cash, and their assets, the type of assets that you can have online for not just like 10 or 20 years, but if you get a big one, it's 50 years plus. So there's some interesting companies out there that will probably get bought eventually, but I figured that'd be an interesting place to start. I don't know if you've done any work on copper in the past, but I think it's definitely another thing to keep an eye on, kind of depending on where things go.
Oh, absolutely. Well, V, your history's in strategic metals. I know copper, is that considered strategic or no? It doesn't.
Strategic is
like vanadium and
vanadium, chromium, molybdenum, cobalt. That would be strategic.
Now, isn't silver a byproduct of copper mining?
Depends on the mine, but
okay.
So, most silver production is a byproduct of other mines. Can be gold, can be copper, can be whatever. I think zinc, if I remember right, is another one where that happens frequently. But most actual silver production, it's not like a pure silver mine. So that's why there's some interesting stuff going on with silver. I guess that's a perfect segue into some some of the stuff going on there, because that's just like, you look at the April bottom below like 30, and I think we're going to be tapping all-time highs. My guess is by the end of the year, right? This is a little bit overcooked, like short term, going from basically up $10 in, what's it been, a month? But I think basically we're at a point where gold, silver, the precious metals are really starting to move. And I think like, I'm not one to talk like with direct knowledge on some of the market manipulation or what like the physical commodity exchanges have on hand for silver, how much they're manipulating the price or any of that stuff. But you start to see like silver start to move like this, and it turns into a feeding frenzy where it'll be interesting to see. Like, this is obviously like the quarterly close, and we're I think in the next 5 years, like $100 silver is basically a lock, and probably sooner than that. Honestly, I don't know if you guys have thought of the long-term future, but or even maybe near-term stuff, but would love to hear what you guys have to say on that.
5 years. Well, if you just look at it strictly as a function of how much it's gone up and how long, price over time. Obviously, the farther back you go, the weaker the trend. But if you look back, let me see, March of 2020, silver was down to, of course, I don't want to count the COVID crash. So let's just say October of 18 it was at $14, right? So you're going for $14. Let's see here. So how far is that? I'm on my own screen here.
Yeah, I'll let you screen share here if it's easier for you to kind of
yeah, sure. We'll probably do that. This is the way people can see how like this type of, and I'm going to do a very simple analysis, right? And I won't make this a very long thing. I actually have some of my mental capabilities unlike yesterday. I was running on empty yesterday. Let me see here. So silver XAG. I want to use a different, just what I was doing. Okay. So let me jump to the daily chart. And let me make this so you all can see it. Okay, so, sorry guys. Let's undo that. Good. So I'm going to go through history, just a brief look. We'll go back to 2018, which was essentially a bottom, if you will. In fact, if you want to even be more conservative, we can take it back to like 2015. So to today's price. And then maybe we'll take off this this
rhino horn.
This rhino horn, yeah, we'll take off some of that because that may or may not pull back. I think it will temporarily, at least, right?
We'll consolidate at some point. I don't know if it blasts right through.
May not pull back. Yeah, we'll be like not conservative, not aggressive. I'm just going to establish the trend. So, $100 silver. If we just extrapolate this trend, and it continues along this line without going parabolic, which it very well could, but just a linear trend has silver at $100 way the hell far out there. But if you were to, like, these things go parabolic. Silver goes parabolic, and it goes parabolic in stages. So it's a question of, is it going to continue along the current trend? Instead of 2050, the current trend has it, even if you cut off a lot of that rhino horn, that's $100 silver in 2033. And that's, within, what is that, a few years? I don't know, 8 years, $100 silver. But here's the thing. What it's not accounting for is what's going to happen to the dollar in that time. What's going to happen to our economy in that time. With the things that I think we're going to see happening with the dollar and the economy. I'm not saying we're going to go Mad Max and it's all going to blow up, but I think there's going to be a severe devaluation of the dollar. I think we'll see the dollar devalue 50% by 2035 as a function of survival. That takes the current price from 46 all the way up to almost $100 based on that alone. So, if this were to go parabolic and I were to draw a parabola and roughly, sorry, my mouse is going out on me, guys. I ordered a new mouse. It shows out tomorrow. But it's just, dude.
Because your mouse is racist, that's why.
My mouse is racist. It does not like white people.
Told you.
That's the problem. What have I done? Oh, okay. This really went haywire on me. Oh, dude, I don't even know what just happened. But
Aren't you like a quarter black?
actually, yeah, it's not a very
Your
well
new
known.
name is quarter black cowboy.
I'm a 25% black. It is what it is. I mean, that's
Token.
what, dude. I actually really enjoy that part of myself. So let me go ahead and try this again. If it doesn't work, I'm just going to blame the mouse and move on. But in the current trajectory, oh man, yeah. I mean, if it just continue, I'm not going to count the rhino horn again. But $100 silver, even at the current trajectory with what's going on, is realistic. Like if we just gently manipulate this, I mean, that's 2026. I mean, what if it pulls back and the parabola doesn't quite continue, whatever it might be, 2027, 2026. It's all very realistic if things go parabolic. And I can guarantee you, if we start to see a lot more conflict, if we start to see a lot of what I'm not afraid, but what I'm anticipating we're going to see in the next couple of years. Yeah, by 2030, $100 silver is extremely realistic. But that's me looking at charts. V, you're way more in touch with the metals world, boots on the ground. What do you think?
What are your projections again?
By like 2028 is realistic for $100 silver.
$100 silver.
2028, 2027 is possible. 2028 is
very,
likely.
very possible. Not out of the spectrum of what can be. You can look at $100 silver, 8,000 gold. It's very possible.
I think when it happens, it's going to happen very quickly, and I don't think it'll take all that long.
Right, and it's going to be event driven.
I think so.
It's going to be partially driven by that. It's going to be partially driven by debasement, partially driven by actual like fundamental supply demand stuff, which from my understanding, we're still like underproducing underproducing demand by, was it a couple million ounces a year, or is it a lot more than that? I can't remember if I'm getting that mixed up with platinum. I might be mixing that up, but I do remember it's basically been in a pretty severe deficit for the last 5 years as far as silver production versus demand.
Mm-hmm.
Yeah. I mean, that's man, the tricky thing about silver is I heard an argument this morning about silver. It's not really used monetarily at this time. And I don't know that it ever really will be, but it's industrially used, right? So gold's like almost so much of gold is going to be monetary. There's jewelry and there's some parts it's used is sort of industrially, but gold really it's a monetary thing, right? It's a store of value. I think silver is a bit more industrial than that. But let me tell you something. The minute any kind of conflict, major conflict breaks out, that's the event. That's the type of events that would drive that. But it's gone up since 2018. Like, what was it? $14. Now it's almost 50. That's over 3 times. It's gone up 300% in 7 years. 300% in 7 years without any, I mean, what events? Sure, we had a little dust up in Ukraine, and I know there are 2 million dead Ukrainians families who wouldn't call it a dust up, but it's not a world war, right? So, I think a real event could crush silver into priceless areas. That's just my opinion.
Yeah, I think when it does happen, it's going to be something where it gets valuable enough to be closer to money again, where it's maybe not 50-50 industrial and monetary. But I mean, you go back and look at like a chart, like I have here, like the all-time chart on TradingView, where you get the massive spike basically up to 50 on if you can share.
Oh, sure.
That.
Sorry about that.
Yeah, no worries. When you get like a chart like this and you understand what's happened to the currency over that period of time, there's very few things like silver trading at like relative to dollars where it's trading at now, even though it's like looks like it's gone parabolic in the last several years. And you kind of look at what's happened as it started to break. It's one of those things where I think it's basically a smaller market than gold, and it's in a secular bull market. And I don't know when it is going to like really take off, but I think all-time highs are coming. And if I had to guess, like, I'm not going to trade anything near term on this. Like, I got my silver shit hits the fan fund. But I kind of look at it as like, I would not be surprised at all to see all-time highs by the end of this year. So, and gold is kind of in like a league of its own as far as the way that's been running over the last year and change. Right, last 2 years, I guess now. And you kind of see where all this is headed. Like, is gold going to 4,000 by end of the year? Maybe. Is it due for a pullback after what, going up $400 an ounce in a month? Maybe. Like, all this stuff, like, it's hard to trade some of the stuff short term and get to like, I know it's exciting to see stuff that you own go up and you have exposure to it, but at the end of the day, like with something like gold, right? My view is that over a longer term time horizon, especially if you start to see gold become like a big part of the financial system again, a central reserve asset, you see central banks buying, you look at gold and something is like, okay, if it's that or a savings account or that or cash, and it's like, okay, I can really sit on this for more than 12 months, right? I still think gold is a better way to store wealth than just sitting on a savings account. So obviously not like specific advice, but if you go and buy gold and it goes down $100 in the next week, right? If you can wait another month or something or another 12 months, like you're probably going to be just fine. So my personal favorite has been on a tear lately, which is platinum. Basically starting to move again. What was that, last week? Beginning of last week with a nice I mean, I kind of look at platinum as the forgotten metal out of all of this. And I think the actual fundamental drivers for platinum are, I think, simpler to read than something like silver. And it's a smaller market that is going to, I think, get squeezed in a big way in the next couple of years when you start to see inventories deplete. So it's one of those things where I look at it, and I'm not saying any investment is can't lose, but in dollar terms, something like platinum, gold, silver, whatever it may be, physical precious metals, if you're just looking to store your wealth, I think that's a much better way to do it than getting rotted away by inflation in a savings account. So you have anything, any views on platinum or any of those near term, or what's your kind of thoughts there?
V, jump in on that, because I know you talk about, I mean, obviously I'll soft intro that. Is it, which one, V, comes from space, platinum or palladium?
All three of them, platinum, palladium, and rhodium, are from astral impacts. They are all part of the Pallas Athena of metals.
Gotcha. So what is that? I mean, like I said, I could talk about this, but I just repeating stuff that you say at this point.
Platinum, palladium, rhodium are a family of metals that originate from meteor strikes here on the Earth and meteors, comets, and whatnot. They're predominantly found in South Africa and Russia, and I think one other place in the world that escapes me currently at the moment. I think it's somewhere in South America, if I'm not mistaken. But yeah, and they're very thinly traded. There's not a lot of them out there. They have very serious industrial uses. People are talking about fusion energy these days, and they've been talking about it for quite some time. Trying to do fusion without platinum is a very inefficient way of doing it. You need platinum to make the most efficient form of fusion energy. Platinum has the crystalline structures that's needed for fusion to work properly. So it's going to be very vital, and it's very, very thinly traded, man.
Yeah, it'll be interesting to see where it goes. This was one of the more interesting tweets I've seen on it, with kind of like laying it out in perspective and what's happened to people's wages over the last several decades. Right. If you think the economy is doing well, gold approaching 4,000 an ounce should greatly concern you. The labor of 95% of citizens can't earn 1 ounce a week of gold. In the 1950s, the American minimum wage earned an ounce a week.
It's amazing.
A minimum wage of, I mean, rounded up like 250 grand a year, basically, right?
Yeah.
So that kind of tells you what has happened to purchasing power over that time, and kind of getting squeezed on that front. But I figured, I got someone commenting rhodium. I have a buddy that I have had on my podcast who's talked about rhodium, and he put a big chunk into, I think the rhodium ETF is not super liquid and it's traded on the London exchange. And I think he is expecting a huge, let me see if I can find that ETF. I think it's this one. Yeah, so it's not like going to trade a ton of volume. So buyer beware on that. If you look at the massive spike it had, I think that's when rhodium was up to, what was it, like 20 or 30,000 an ounce, somewhere in there. And it's showing the same signs of, hey, this thing's about to make a big move. So it'll be interesting to see. I think rhodium is even more rare than platinum, and it's a byproduct, I think, of mainly the mines in South Africa and Rhodesia, aka Zimbabwe. But the other thing that I wanted to get into, unless you guys want to chat on that a little bit, is some of the stuff with the Dallas Fed survey from last week on oil. And that's been pretty interesting to take a look at as far as some of the responses. But basically, this is kind of like gauging the temperature of the oil space and oil companies and what they expect for various things. You got one guy over here who's an outlier, like super bull on oil over the next 5 years. Not expecting much from the prices in the near term, but there's they kind of talk about whether there's any cost savings in what Trump has done for regulatory burden. They get into the spending cuts that they have kind of dealt with over the last really 6 months is when that kind of wave started, since the beginning of April and Liberation Day and whatnot, all the tariff stuff. And you kind of see it in rig count and all this other stuff. So let's see, there's one more piece here I want to touch on. Yeah, they're basically most of the companies are not hedging a ton. They basically have said, hey, like, we're not going to be locking in prices here at this low level if we can avoid it, right? There's some suppliers and some producers, because of their banks and hedging and like debt covenants, that are forced to, but for the most part, most of them are not interested in locking in these prices. And there's some comments about like what Trump has said, and we're not hedging at 60. 60 is below replacement cost, which kind of lines up with stuff I've talked about in the past. And the twilight of shale, like, this is all the anonymous. This is basically the putting Trump on blast section as far as what they kind of expect. But right, this has kind of always been my case, is like, the U.S. isn't going to run out of oil, but I don't think we have an infinite supply of oil that we can drill at $60 a barrel and have it be profitable. So it's there's a lot of other things going on that are going to be interesting to see, but there's definitely there's one guy who thinks we were going $200 a barrel in the next 5 years, which is pretty out of consensus for most of these producers. Like, a lot of these guys are very conservative and kind of expect like the whole Trump admin pushing for $40 or $50 a barrel. Like, it just turns into a giant shit show that is a mess for the whole industry, really. And this kind of goes into more of the shale stuff as far as some of the oil field services dynamic and some of that stuff there. And you kind of look into some of these different things. And this is where, if you guys want to look for the full comment section and kind of the surveys, forecasts, all this other stuff, just go look up Dallas Fed energy survey. But I think there's stuff that is really interesting going on in energy right now. And I don't understand that Saudis are bringing back production and all these different narratives, but I still am waiting to see if the oil glut shows up, because it's been on the horizon for a long time and it's just hasn't materialized yet. So kind of still waiting on all that, but it'll be interesting to see as far as where it all plays out, because basically the only asset that has been that has basically kept the lid on in the last like 3 to 6 months is oil, compared to precious metals, stocks, other commodities that have started to move. But you kind of start to see patterns, and if you look back far enough, gold typically goes first, and then copper tends to follow, and oil shows up late to the party. But once oil goes, it's basically the talk of commodity bull market really gets going. So we'll see where it happens, but I'm kind of expecting it here in the near future. So you guys have any thoughts on that, or any long-term picture on where you think oil is going?
I mean, I have a general statement on that. If you look through history, every type of energy that we've had, even if it's like peat moss, or peat, I should say, like, it continues to be used and used more. Like, we've never taken an old type of energy off. Coal, I think coal is even still baseline for a lot of the stuff we do in our economy for energy, for electricity generation.
Last
So
year
I don't,
was a record high for coal usage.
yeah, exactly. So I think oil goes up. I think demands only go up. I don't know that we're going to be able to add on these SMRs in time. I think that these the AI thing, and even though AI might shrink, and once we realize it's a lot of it's BS, and the market kind of corrects for this AI insanity, I think we're still going to build the data centers, and we're still going to run and need the energy. And so therefore I think, sure, you can put some nuclear reactors to service those, but where's the rest of the economy going to get powered by? Which is why I also think copper will go up over time. The only thing I'll say besides that is that these things, it's just like watching a bankruptcy that we always talk about. It's like watching what we think is going to happen with the bond market or parabolic move in silver. Like, it takes a long time to happen until it doesn't, and then it happens pretty quick.
Yeah.
So, and it tends to take longer than you think, because a watched pot never boils. So everybody who's staring at oil every day looking for it to move, like, if they just stop paying attention to it, it's going to move. But it's a psychological thing. So I'd say if you expect oil to move in 2027, it's probably going to happen in 2029. Like, that's kind of how just I've noticed that things go. And a lot of that's based on personal expectation and personal, it's not metrically based per se. It's more about people just being impatient. So
Yeah. Market
that's
psychology too.
big time. Yeah. And by the way, the very last thing I'll say is, if you look at stocks, like small cap stocks, there's always a bleed out where the smart money is loading up. And so what they do is they scare people out by crushing the price. And every time a large holder sells, they're buying the bottom, but then they push the bottom lower and lower because they can afford to, and they want all of that money out. They want the big holders out, so that by the time price does rise, there's nobody there to ruin the chart. Oil's a much bigger animal than that, but I think a lot of that still remains true in a sense, right? So that's my look on it.
Well, the financial market for oil is like 50 or 60 times larger than the physical market. So it's kind of the tail wagging the dog on prices and all the other like volatile swings we have in oil, when in reality it should be purely based on
Delivery.
the economy, delivery. Like, is the economy heating up? Is the economy slowing down? Right. And that would move oil prices. But I think oil prices are way less efficient today than they maybe were 20, 30 years ago. Not that I was trading oil at the time, but you kind of look and hear stories from guys that were, and it was, it really was a supply and demand market. And now it's a lot, basically a huge factor of what goes into oil prices is like, what is XYZ hedge fund doing? Are they short? Are they long? What kind of size they have on, all that stuff. And it's frustrating, but eventually I think the physical market, like reality, will reassert itself. So that's kind of where I think it goes. So,
well, actually, and that's Via. I don't know if your mute is on or not, but the question I'd have around that is, if you think that things are going to change so drastically in the next 5 years with the economy, derivatives market, all those things, what do you think is going to happen to the oil derivatives, like the oil financial market? Do you think that that's going to contract and we're going to go towards a more quote unquote physical market, or do you think it's only going to get worse and expand, or both? Like, what's your outlook?
I mean, petroleum derivatives, I really can't comment on that. It's not something I've looked at and how that would affect the broader economy, or how the broader economy will affect that in terms of how it's going to go. I mean, if we're going to go to a more of a physical market, I mean, I don't know. I mean, there's a lot of people that bitch about the fact that oil that is so strategically valuable is really put on a speculative market, and should it be? And if it is since it is on a speculative market, how much should speculators really play in the role of oil, or should we just completely turn it around how it used to trade back in the day, where one guy sat across the table from another guy determining the price based upon how much he can hedge out for X amount of years? I don't know. I'm not sure. Ben, what are your thoughts on that?
I think it'll be interesting to see if some of these contracts are around in 5 or 10 or 20 years. I think you are seeing this kind of across gold and precious metals markets as well, where sheesh. Now I have that stuck in my head. Thank you for that. Anyway, but what I was saying is, I think it'll be interesting to see, because I know a lot of volume has started to move to like the Shanghai Gold Exchange and some of the exchanges for oil in the Middle East. And I know I've talked to Tom Longo about this on my podcast a while back, and what he's kind of said is he expects the Brent futures contract to basically disappear at some point, as it is a purely financial instrument. There's no delivery based on right. The whole Brent contract was based on oil they were producing a lot more of several decades ago, right? And now it's just a vehicle for speculating on price. So I think the way I put it is, could the financial market size get bigger in the next couple of years? Like, I'm certain it could happen. At some point, I think it gets dramatically smaller. There is a place for hedging and other like trading activities where you probably want a financial market that trades more than like just the physical barrels. Doesn't need to be 50 or 60 or 100 times as big as like the physical demand. Like, do we need to be trading several billion barrels a day when daily demand is 105, 104 million barrels a day? I don't think so.
Well, and it's easy to kind of extrapolate how that might work, and there's so many variables. I mean, the way, and we're I King, and we can fix the world in this conversation. I would say that if somebody's going to play around in that market, then they would need to own verifiable shares of a place where that oil gets delivered. So it's not just speculation. It's that you actually own, this percentage of that facility where the oil gets delivered. But now I'm just kind of spitballing, and I don't know how useful that is, right?
Yeah. I mean, there's something to be said for having to take delivery on certain contracts. And that's, what sent oil negative back in 2020, because there's no storage. So,
well, and you can't, as a regular person, you can take delivery of gold, or if you really care to, of bushels of corn, if you're like somebody who does that. But who is going to get what regular person is going to get 10 barrels of oil delivered to their house? Like, it's just not. So that's why you'd have to do it differently. But again, it's all kind of spitballing. And I think the last way to look at it is these markets are financialized mostly in the US and out of London. So I think that as those currencies go through whatever they're going to go through, it may be that those markets disappear because those currencies become no longer feasible, because the debt the gilts are not worth anything, or even like US debt's not worth anything. And I think by that time you'll just have China picking up, all of that. And I'm not saying that's going to happen, but I'm saying some version of that and some level of that might happen. It's not, again, I'm not going Mad Max on you. V will go Mad Max on you. I think V's ready to just V. I
Not
invested,
Mad Max, man. I think
I invested in cat food purely based
well,
on
I
your
think
show
long
yesterday.
term Purina is looking like a very strong candidate here,
Bro.
and I think
Alpo.
doesn't really do cat food, man. I think Meow Mix is something that you have to. That's most often overlooked in the market.
It's
Followed by Fresh
Baxter.
Pet.
It's Baxter. Who remembers the commercials?
So that's the whole thing with. So I'm a big believer in Meow Mix. It's I'm telling you, it's one of the most overlooked things in the
Fancy Feast. You're
Fancy
missing
Feast
the boat.
is where it's at, man.
Fancy
I mean, I'm a big fan of Fancy Feast. I like how it's performing, and I think
make
the long
commercials.
term.
I own the long-haired white cat.
I'm very bullish.
I'm
very bullish on Fancy Feast.
I thought you said you were Jewish for a second.
I'm very Jewish on Fancy Feast.
Oh boy! I'm glad I have half of my brain back today, dude. I was trying to explain things yesterday. It did not go well. I was so freaking out of gas. What do you think, Ben? Do you think? I mean, if you just had, I know this is the worst question to ask somebody in the energy market. Is there a buy date? So it doesn't have to happen on this date that oil breaks like $80. Like, do you think it'll happen? And again, feel free to tell me to F off and not answer it, but do you think it'll happen by 2028?
Oh yeah. I think before that for sure.
Okay.
I was getting distracted there because I'm thinking about how you guys are long cat food and boxed wine, but but the way I'd put it is I think sometime in 2026 you're going to see OPEC with basically their taps are fully open or close to it. There's not a bunch of spare capacity. Demand keeps going up 1% a year, maybe more if the economy's good. And you're probably, if I had to get a little more specific, I think it's first half of 26. You're starting to see signs that oil's going to make a big move. And I've talked to a couple different chart guys that trade it based on that. And they basically have said, yeah, once you break 75, 80, that's the start of a much bigger move. And then it starts to feed on itself. And it's not just fundamental of, okay, supply and demand is not, does not make sense here at these prices, whatever it may be. But that's kind of where I think it starts to happen is sometime in 26. I have no idea what the rest of this year holds, but it will be interesting to see as far as inventories, whether we actually get a supply glut or not. But I think it's basically we chop around here for the time being, and then at some point, maybe, I mean, who knows? Maybe it's sooner. Maybe there's some other stuff that happens between now and then. But I think it's basically going to be something where gold starts to act like gravity in all these different commodities and starts to drag prices higher, even if and part of that's debasement of the currency, and part of that is all these different things that we kind of talked about. But I think it's kind of one of those situations where the downside on oil is hey, maybe you go into the 50s for a little bit, but then you see what happens to the Permian and you're not staying there for long. But your upside, I think, is very asymmetric. So I kind of like the whole space, some of the equities in that area. And that kind of brings me to the last topic that I'll get into briefly. I'll save the full detail for people on the Substack, but I don't know if you guys have followed this all that closely since I kind of mentioned it, I don't know, a while back on the show, but this is one of the investments I have. So not specific advice, and do your own research, all the good stuff. Basically what has happened in recent weeks is they kind of gave a press release and 8K disclosure and investor presentation yesterday on Sable's plan to potentially use barges and tankers to produce oil off the coast of California. And the funny thing is, in the first, the whole reason for the pipeline in the first place when they built it, was it 30 years ago, was so that they wouldn't have barges and tankers operating like they did from, was it 81 to 93, somewhere in there. And like you see it right here in the language from this journalist who has been moaning about the whole prospect of Sable pumping oil. And he basically said, yeah, like the prospect of $8 a gallon gas is not politically viable for Newsom if he wants to be president. And that's why you see some of the other legal developments like State Bill 237, which goes into effect on January 1st. But there's I think they're basically at a point where they're between a rock and a hard place, and they kind of overplayed their hand. So we'll see what they choose, but it's up to Newsom to decide, hey, do we want the tax revenue from the production to end up in California? Do we want the oil to end up in California? Because the funny thing is this, the bill they're passing actually has a provision in it, or a section in it, that basically says any oil produced offshore must be transported onshore by pipeline. And so the oil, if they have to go use barges, wouldn't even end up in California. It would end up in Asia or Washington State or wherever. And so, like, it's basically up to the state to decide, hey, do we want tax revenue? Do we want oil in the refineries? Do we want potentially lower gas prices? Or do we want to let the federal government get involved? And do we want to deal with a takings claim for the onshore assets in the pipeline? And do we want to see what happens if Trump comes in with a government stake or a DOE loan or whatever kind of the rumor floating around is? But there's it'll be interesting to see where all this stuff goes. But I think it's basically playing a game of would you rather with Governor Newsom. And this is the long story short that I put in my post this morning on it is like I don't think the incentives line up for Newsom and the state to basically railroad this thing. So my guess is that we'll get the fire marshal approval soon. Oil flows through the pipeline and it's good to go. But there's still a lot of uncertainty about which path it takes and what a federal intervention might look like and all this other stuff. So it's definitely like an interesting special situation. But for anyone interested, like make sure you do your own research and like are 100% aware that it's still a California oil company and that comes with extra hair on it, I guess is the short version. So, yeah.
Oh, good Lord.
Yeah. So,
but you know, one of the thoughts I had about that was Bell is saying that California's finances are worse than what we might think. And so they might be, yeah, right. I mean, that's my original home state. I left there. Thank goodness. I'm freaking so happy to be gone, especially after what's going on right now. But the point here is that if their finances are that bad, you know, oil is just kind of a steady way to bring money in as long as you have good reserves. It's like the oil will always get bought. So,
well, you know who the largest taxpayer in Santa Barbara County was before the project shut down?
The owner of the project?
It was Exxon. Yep.
Yeah. So, you know, Santa Barbara in and of itself too, they're probably, I'd imagine Santa Barbara's pushing for it. You know, the rest of it's probably a lot of horse trading in the background. But I think that if the finances get to that point where the revenue is going to make a difference, then you'll see the project just move ahead without all the hair on it. But, you know, that's...
Well, that's the thing is it gets way simpler once oil's flowing through the pipe. And even it gets way simpler if the federal government steps in and says, hey, like, we're done here and we're going to allow them to use tankers and it's the assets in federal waters. So the state can't do anything. And then you just have a offshore producer that never touches the state of California. And it would be like the ultimate political move for Trump to come in and basically take a dump all over the state and pick a fight with Newsom. So I don't think they're going to go that route. I think there's enough that'll kind of nudge them over the edge. And I think this talk too of the tankers and FPSO does give Newsom some political cover and the fire marshal some political cover where it's like, hey, like, you guys sure you want to go this route? And you sure that they want to deal with all this? But right, it's not like a trust Newsom scenario. It's, the guy is basically a snake, and you're trying to handicap, like, what is he going to do that's politically convenient for his 2028 run. And having more refineries leave, which I think was it Valero's Benicia refinery is shutting down, or in the process of shutting down, and will be pulling out next year. And I think was it Conoco? I think it was Conoco. They have one that's like they're accelerating like the process of pulling out, right? And you look at what has happened to refineries in the state, and like the bill they passed, I think is just too little, too late for it to be effective as far as keeping refineries there. So eventually, this is like a matter of national security as far as refiners in the state, the number of military bases there, right? And it's going to be interesting to see how it plays out if there's like kind of what happens. But if you want to have refineries, you need to get the oil from somewhere. And all these refineries are geared to like use a significant chunk of California's oil production. When they were producing, I think it was 1 million barrels a day, 1980. Like California has some massive oil reserves, and they just basically decided to choke that off, and they're kind of reversing course now, but we'll see where all it goes. But if Sable comes online, you can basically put a big dent in the state's oil demand, which would be good for everyone involved. So we'll see what happens.
There's those refineries in LA, which I don't know the comparative capacity of those, like, what percentage of the nation's oil that can handle. But yeah, when I was a kid, they were still pumping oil. I mean, you still see the derricks off Long Beach or what do you call those? The offshores off of Long Beach and Santa Barbara. They're still out there.
Yep.
In fact, if you go to the, well, I don't want to say that, but anyway, what type of reserve underground in California, like as compared to, say, the Permian, is it what is the size of that reserve? Do you have any idea?
I think it depends on like how long you want to stretch along the coast, but from my understanding, offshore California is absolutely massive, like billions of barrels plus, like up and down kind of that section. And from what I've kind of heard, it sounds like Sable, just from their one offshore block there in Santa Barbara, is probably sitting on like 1 billion barrels recoverable. So it's like the type of asset that could be online for 40, 50 years type deal. And there's obviously oil in other parts of that area and down the coast into Long Beach. And there's also onshore oil, which here's my this will be a good way to kind of wrap it up. Here's my like schizo theory about the politics of California being insane and keeping the oil in the ground is that if things ever get bad enough, California is like the break glass in case of emergency strategic petroleum reserve for the U.S. Where if oil prices go high enough, the political will suddenly show up because no one wants to deal with oil prices being that ridiculous. Like I think even Pelosi, was it in 2008, was talking about like more drilling, and that was when oil was like basically all-time highs at the time. So if prices go high enough, like political will be there at 100, 150, 200, whatever it is, if it's not just a one-time spike that comes right back down, right? Yeah, there is no capacity to refine. That is an issue. As far as how they resolve that, I think if it gets bad enough, if the political will is there, they'll deal with the red tape for building new refining capacity. And I'm sure it'd come with all the California backroom dealing, but I'm kind of
say back rooms.
Back door.
Sorry, guys. I just got back from my in-home Brazilian waxing.
Oh, okay. That's what goes on in the California backroom dealings.
Well, it's, unless you had an in-home Brazilian wax, you're missing out, bro.
I'll miss out. Thank you.
Yeah, that's a pass.
Happy
for
to miss
me,
out.
But anyway, the whole thing with California's energy situation is fixable. It's just the political will needs to be there, and we'll see what happens with the whole Sable circus. But I think it gets resolved here, one way or another. They're going to get the oil. If they do have to go the tanker route, it takes a lot longer. Would take them, I think, 12 months. And it would likely have to come with some federal support. But from talking to some different people, it sounds like that's definitely an option on the table. So we'll see where it goes. Definitely interesting stuff.
Awesome. Well, V, do you have anything left to add?
Plunger.
Plunger, plunger, plunger.
That's going to be how we take it out from now on. Just plunger.
Yeah, just put the video on.
Yeah.
Oh boy, good stuff, Ben.
Ben, always a pleasure, brother.
Appreciate it. I think be interesting to see how some of the stuff plays out, but kind of big picture market stuff is like you look at some of these commodities and like some of them starting to wake up. Like precious metals always tend to lead, so I think enjoy it, but I think there's also things that are out of favor and cheap that are worth a look. So keep an eye out for stuff like that.
Yeah, definitely. All right. With that being said, that is Ben Kelleran, Kelleran's Corner. Links in the description box. He is the czar of the commodities, the energy markets. Why are you laughing?
What does that even mean?
I don't even know. It just sounds cool. It sounds provocative. Just go with it.
Just as long as you're not calling him the Brazilian wax of the commodities.
He is the Brazilian waxer of the commodities.
Well, hey, man, we did just say that the investment came with a lot of hair on it. So, got to do
Hey, if you're interested in hairy investments, we have just...
Okay, this really went sideways. If you get us out of here before it gets worse.
All right. With that being said, we're out. Take it away, Cowboy.
All right. See you guys.
Later,
See you
guys.
then.
Cheers. Bye.